Back to a special edition of Swan Signal Live. We're here with Andy Edstrom and Lyn Alden. Before we dive into this special episode, because there's so much bullish news to talk about, we just had to get these two on to talk about it. I'm gonna shill Swan for just a minute. So much going on at Swan to talk about. We have, behind the scenes, it's just absolutely crazy. How much being absolutely productive in the back end. We have daily buys rolled out now. We have a brand new onboarding flow that has received rave reviews. It's just easier than ever to sign up for Swan and start stacking. Really smooth flow. We just had a tweet from James O'Byrne, core dev, actually, who gave props to the flow design today. So props to the design team, Jorn Reuter, Jan Pritzker, and team there doing great work. We are live in New York. We announced that last week. So if you're in New York and you haven't heard the word yet, you can now stack with Swan in New York. That's a big deal. Like I said, we have daily buys. There's too much to keep track of. We have one-time buys coming soon. We're working on it. We have other improvements to the product to make buys happen sooner, so there isn't a wait when you make your first deposit, etc. We have wires. We've been receiving a lot of big wires lately too. So we have $1 million wires being sent into Swan, big whales buying at Swan. It's a great deal. We'll take care of you. So just get into if you want to log into your Swan account, there's just a link right there in your dashboard to send a wire into Swan and execute your buy. So tons going on, product developing super quickly, really excited about everything happening there. Excited as well to talk about Bitcoin with Lyn and Andy today. Of course, Lyn Alden is an investment strategist at Lyn Alden Investment Strategy, and Andy Edstrom is a financial advisor and author of Why Buy Bitcoin. Both have been on the show numerous times, so I hope you're familiar with them. Hey, how's it going? Thanks for coming on, guys.
Thanks for having me again.
Great to see you, Brady, as always.
Yes, as always, Andy. Good to see you too, and you as well, Lyn. All right, so we have a litany of bullish news that has happened since our last Swan Signal Live, just last Tuesday, over the weekend, yesterday. We're going to start off with an endorsement of sorts that Bitcoin received from one of the world's most foremost historians, and in particular a financial historian. He wrote the book The Ascent of Money, which is a absolutely fascinating read. If you're into Bitcoin and you're into money and learning about what money really is, the history of it's fascinating. Niall Ferguson, in an article today, dropped a pretty, I would say, heavy endorsement for Bitcoin in this particular time. Andy, I know that you are familiar with Niall's work and a fan of him. Would you mind kicking us off and talk about Niall's work and what you think this means for Bitcoin?
Yeah, thanks, Brady. Happy to do that. I don't think it's an exaggeration to say that Niall Ferguson is the most prolific historian alive today. Certainly one of the most prolific. I've read 3 of his books, which sounds like a lot, except that he's written, I think, 15 of them, and he's not even that old. So, he's just a prolific producer of historical analysis, let's say, and he's just an impressive intellect. Now, he's written about several topics. He's written a lot about empire. He's written a lot about geopolitics. I think he coined the term in one of his books, chimerica, which was his notion of basically this interrelatedness and growing interweaving between America and China in the first decade of this century, since China joined the WTO. His latest book that I read was The Tower and the Square, which was a historical survey of networks, including social networks, which I think probably informed his views on Bitcoin. And as you said, he's written a lot about finance, including histories of some of the biggest financial families like the Warburgs, like the Rothschild. Side note, my first job out of college was working for the Rothschild organization before I got recruited by Goldman. And then specifically, he's written about money and the history of money, as you said, the ascent of money. And that's one of his probably most influential books. So suffice to say, he's a big brain, but more than that, he is a bridge, I would say, between academia and the real world. He's not one of these ivory tower guys that just churns out material. He definitely is well known within people, spheres of people in power, governments, companies, he's a very influential voice. So yeah, him making positive statements about Bitcoin in one of the major financial periodicals around is huge. And this is what I think mainstreaming looks like. And this is what we've all been working for.
Yeah, I think it's huge as well. The title of the piece itself is bullish as can be, really. Bitcoin is winning the COVID-19 monetary revolution. There's a couple pieces there, and Bitcoin is winning a monetary revolution. Massive, just, ways to couch what's happening here, right? And the idea that this is actually a revolution, I mean, that's a big word, Lyn. And it's really big to hear it from an author, an historian who has, such context. So like to hear Niall Ferguson call this a revolution, is something else than your average Bitcoiner calling it a monetary revolution.
Yeah, I agree. I mean, instead of coming from within the community, it's coming from without of the community. And so that's kind of been the story of Bitcoin this year, is having a lot of people that, weren't on board, with this asset class, in the past 3 to 5 years, they're now coming in and kind of, christening it as somewhat of a mainstream asset. So they're dropping some of the old narratives, regarding Bitcoin being used for criminal activity or things like that, and then focusing more on the fact that it's the network effect that it's enjoying, and also focusing on the fact that the market cap keeps going up, and then over time it's gotten more and more impressive as a store of value. And what I find interesting about the piece is that he kind of approached it in the same way I did, which was emphasizing the store of value aspect of it, because Bitcoin, both the critics and the proponents of Bitcoin have pointed out that the common narratives for Bitcoin have changed over time. So it's kind of, and it also depends on who you talk to, right? So people, the great thing about Bitcoin is it is what it is, and then people can interpret it in different ways to some extent. And so it had that narrative of being a payment network. Then it shifted more towards store of value, and then it can shift to being money as well. And so taking all those things together, he kind of emphasized the store of value aspect, and that's what kind of brought me to be bullish on it as well, is really emphasizing that that key aspect to it. And so I think his article is very bullish on it. He also talks about the dollar index, which is another thing that I've been emphasizing, that if you look at over the past 5 decades of this current kind of, you can call it the petrodollar system, ever since Bretton Woods ended, we had this floating exchange rate system. And if you look at that 50-year history of the dollar compared to a basket of major foreign currencies, it's had these 3 really big cycles. So it peaked in the 80s, then it had a big decline, then it peaked again in the late 90s, early 2000s, then it had a pretty big decline, and we've been in this third dollar kind of bull period ever since late 2014, early 2015, and so and it looks like we're starting to roll over, and that's not, of course, confirmed yet, but basically, the momentum is now down from this pretty bullish level. So he had a nice chart in there showing that long-term dollar index. And so I think he made a ton of sense. He also did some back of the envelope math, showing, like he said, I think he references his like math he did from like 2 or 3 years ago. And he pointed out that, if every millionaire put 1% of their net worth in a Bitcoin, the market cap would have to be huge. It would have to be like $75,000 per coin, in order to accommodate that flow of money. And then he even referenced it down and said, okay, what if it's just 0.2%? Then you get it 15,000, which back when he said that was pretty bullish. Of course, now we're above that. But the point is, it's still a tiny market capitalization compared to the big money that's out there.
Yeah, it's as we've all been saying for years now, that there's so much more upside to this. PTJ calls it the fastest horse, and it's just fascinating to see this one after the other. These more mainstream financial people, is now in Niall Ferguson. I would call him a financial person too, since he's a historian of the subject, endorsing Bitcoin. And the way he did it, again, in the title was amazing, but a couple of quotes from the article. He says, first, as we have seen, Bitcoin offers built-in scarcity in a virtual world characterized by boundless abundance. And second, Bitcoin is sovereign. So the two factors, the two features, I guess, of Bitcoin that he cites for allowing Bitcoin to be winning this monetary revolution is scarcity and sovereignty. And I think it's extremely important that he noted sovereignty. And he, at the very end of the piece, closes out with this, that the United States should recognize the benefits of integrating Bitcoin into the financial system, which, after all, was originally designed to be less centralized and more respectful of individual privacy than the systems of less free societies. This I brought a smile to my face. And I think this has been a debate that we've been seeing on Bitcoin Twitter about Bitcoin and privacy and big investors coming into the space and Bitcoin regulation being inevitable, which I agree that it is, but also keeping in mind how important the sovereignty aspect is, the self-sovereignty aspect is to Bitcoin, and how important privacy is, having that ability to opt out of payments panopticon is critical as well, critical feature of Bitcoin. Andy, do you think that, to me, this was a really big deal that Niall called this out. Any thoughts on that closing paragraph?
Yeah, absolutely. It's crucial. And Ferguson is better placed than most to think about this issue critically. I mentioned the whole Chimerica concept, right? He's been not only watching, but also articulating and analyzing what's been going on in China versus what's been going on in the US, as well as the interrelation for, I don't know, probably a couple decades now. And yeah, there's no question. He recognizes the difference between what is going on with that regime and how they manage their economy and how they manage their communications, whether it's management of the internet or whether it's essentially, substantially all payment traffic flowing through Alipay and WeChat Pay, which is not directly controlled by government. But clearly, clearly government probably has its eyes on those networks. And of course, I'm sure he's aware about what's going on with the DCEP, basically the crypto, quote unquote, government cryptocurrency that's being rolled out over on that side of the pond. And so, that's a model of running a country and running a society that differs starkly from what we do here in the US and in the West, and highlighting that difference and highlighting basically the fork in the road, so to speak, that we're facing right now. He knows this is a big issue. He knows that if the US follows and issues a government crypto, so to speak, then there's going to be real issues around surveillance, around managing people's data. We're already seeing this with the internet giants, the monopolists that have access to all of our personal data, use it themselves to target us as well as sell it on to other parties. And a government currency, will make this front and center all the more evident. So yeah, he sees the writing on the wall. He sees the way this is going. I'm thankful that there are smart analysts like him that are highlighting this crucial issue because it's central to freedom in society. And we're facing a real crossroads here.
Lyn, how important is the self-sovereignty aspect of Bitcoin to you? And do you think, how important do you think it is to society as a whole?
I think it's really important. That's what made it survive some of the early attempts by governments to slow its path. Because we've seen, for example, some governments like India kind of flip-flopping on exactly how they want to approach Bitcoin regulation. And part of the fact that people can custody it, it's hard to confiscate. That's part of what gives it a degree of pushback against sovereigns that some other kind of a corporate controlled payment network or a corporate controlled asset might not have. The fact that it's just totally decentralized. And I was on a podcast the other day that the breakdown at CoinDesk. And the host pointed out that he's almost thankful that China is going first with the digital currency because it gives people in the West a chance to see how it could be used in some of the more problematic cases. So, for example, China's a high degree of interest in surveillance and potentially even tying that in with social credit scores and stuff. So when they go forward with that, and we start to get news stories about how that's probably infringing more and more on people's privacy, if they then try to roll that out in Europe and North America, I think you might get more pushback here because we've seen it kind of used in a problematic way. Whereas if we were the first to roll it out, people might have been more accepting of it, especially of course when they roll it out and they say, hey, if you sign up for the Fed wallet, you get $1,000 in free Fed coins. Whatever the case may be. I think that when people kind of see some of that from regimes that might go even the more problematic route faster, it might give them some pause.
Absolutely agree. And I really appreciate that Neil pointed this out here. And by the way, it's Niall Ferguson. I've been saying Niall, our producer, just pinged me and reminded me that it's Neil. So sorry about that, Neil. Niall Ferguson and his piece, which was instrumental today in really, to me, just making me feel extremely bullish even more. This is out of all of the bullish news and endorsements that we've seen for Bitcoin over the past few months, this one just stands out to me as a little bit different, a little bit more important in just kind of the historical arc of Bitcoin itself. So really excited to see that on a personal level. Thanks so much for the comments about that. Let's move on to talking about another piece of news here. Guggenheim Investments is eyeing an up to $530 million buy of Bitcoin. They sent an amendment to the SEC, I think it was last week or maybe today, that they would be able to allow up to 10% of the net asset value to be placed into Bitcoin through the Grayscale Bitcoin Trust. This is just another example of a large fund, family offices, large investment funds, hedge funds, making public their intention to invest big in Bitcoin. Lyn, is this one any different in any way, or is this just another domino falling and something that we expect or that you expect to continue over the next 12 months?
I don't think there's anything particularly remarkable about this one. It is one of the larger ones that we've seen, and so it kind of adds on to what we saw from Paul Tudor Jones, Stanley Druckenmiller, all these other kind of big names that are already in the space. So that's another big one on the list. Earlier, I think it was a few weeks ago, we saw Skybridge do something similar where they filed ahead of time saying their intention, to put a percentage into Bitcoin. And so that this is an even bigger case. So I think it's another bullish thing for the industry. And this is something that, for example, Raoul Pal has been pointing out. He called it the institutional wall of money that's coming into it. Probably it's already happening this year. It's probably going to happen in 2021. And so that represents a pretty big chunk of money that even when they put in a small percent of their net worth, of their fund into Bitcoin, that can really kind of move the price, especially when you have, the current supply demand characteristics of people hodling it, the halving have cut new supply in half, and the fact that PayPal, and Grayscale and Cash App are already, they're consuming more Bitcoins than are generated per day. So they're already kind of eating away at the liquid amount out there. And so if you look at kind of long-term charts, whenever you get that happen, the price goes up, and it has to go up pretty significantly to start getting some people to bring their coins out of cold storage, and that creates more liquidity, but not until you get kind of that squeeze higher. So I think that's kind of the characteristic we're seeing this year.
Yeah, Andy, I think we're seeing, as larger investors like Guggenheim, et cetera, get into the game here, there are clearly, an incentive, or at least a plan to hold Bitcoin for a longer term. Earlier today on CNBC, a representative from Grayscale said that most investors are allocating to the space these days are really thinking about Bitcoin over a medium to long-term time horizon. This is, I think fundamentally different from the 2017 sort of retail-driven, trader-driven, run-up. Do you feel like this will have some kind of fundamental difference, make this cycle fundamentally different than the previous cycle? The fact that there are more long-term holders, or might be more long-term holders during this run-up.
Yeah, absolutely, Brady. So a couple things there. Just to key off, but what Lyn was saying about Guggenheim. So I happen to have gone to school with one of the senior members over at Guggenheim. You know, Guggenheim's a huge organization. I think there are hundreds of billions of assets under management. So he runs one of their departments, and I think it was a couple months ago. I guess he pinged me, and he told me he was looking at a possible investment. It was actually in the Bitcoin ATM space. So obviously, you know, part of the ecosystem, a little bit tangential, you know, and of course I talked to him and, you know, told him to read my book and stuff like that. And then I saw the news, and so, you know, it's just an anecdotal reminder that there are people, not just at the junior levels, but in the senior levels of these organizations, you know, who are doing their homework. They're interested in the asset itself, and they're also interested in, you know, the whole space around the asset, basically various industries that touch it. So it's definitely a different dynamic than in the past. Now, the second thing, I think, keying off your question, that we're seeing as we speak is we are seeing basically this explosion in price in proxies for Bitcoin, right? So I think what's happening right now, it's indicative of the corporate FOMO. So what do I think is going on is Michael Saylor, right? He did the legwork. He did his homework, got a deep understanding of it, got his board up to speed. And then, of course, crucially, he did the implementation. He figured out how to both buy and custody it directly. Now, I think what's going on, as you see, you know, BlackRock and Skybridge and Guggenheim and various institutional investors going positive on this thing, is that they want exposure now. They see the wave that's coming, but they haven't done the legwork, right? They haven't set up the practical and legal links to those custodians that will allow them to buy Bitcoin directly. So what are they doing? They're scrambling for the nearest proxy they can find, right? This is why you see MicroStrategy stock going parabolic. This is why you see all the other, say, crypto-related, you know, stocks. I'm not going to name names. I think people know what they are because I don't want to promote them. But those prices have risen dramatically in the last week, and even especially today. I think that it's the institutional investors realizing they need the exposure, but they're not set up to do it yet because they haven't got the legwork on setting up with the institutional custodians, and they're just buying whatever they can buy. So is this time different? Yes, it's different in that way as we speak. And then the question is, okay, how does the cycle play out? Are we going to see those 30% and 40% drawdowns that we saw in the last bull market, 2016, 2017? My base case is yes, we still will see some of those big drawdowns. However, I can also make the case that there's that steady institutional bid. We may have seen this dynamic last week, right? When we hit 19.5, then we drew down back to, I think it was 16.2 or 16.3. And then over the weekend, I have to admit myself, you know, I bought some last week, and then I you know, sent wires basically on Friday intending to buy more. And I was thinking to myself, well, I could buy it now, or I can hope and pray, you know, that there's going to be a pullback over the weekend. And then maybe the, you know, the corporate bid comes in next week. And guess what? There was no pullback. So we'll see. I tend to think that we'll see less of these, you know, savage 30 to 40% drawdowns. Will there be one or two of them? Yes, probably. But it would not surprise me at all if the drawdowns were shallower, at least on average.
Lyn, have you thought about the idea or the possibility that more long-term holders in this cycle might reduce supply, create more of a squeeze, more of a supply shock than we saw last cycle, and also more of a price floor for those drawbacks?
I think partially. I mean, as you get to a larger market capitalization, you know, my expectation would see the volatility go down over time. So a lot of those pullbacks in the previous bull run, you know, a lot of them were in the 30, 35, 40% range. Whereas, you know, I think there's a good chance that the average pullback during this bull run, if indeed we have this bull run that we're all expecting, I do think that the pullbacks on average might be a little bit shallower. But then I would agree with Andy that, you know, we might get some savage pullbacks here and there. And, you know, so for example, back on, I think it was November 22nd, I released an investment report for my research service. And I warned about the potential for a correction here, just because we had come very far, very fast, and we were getting some near-term overbought indicators. So basically, what I did was I wanted to set expectations so that people would be able to handle the volatility. So I basically said, this is not information that I'm trading around. I'm not, I'm not changing my approach based on the fact that I expect a pullback. I'm not selling any coins. I'm not doing anything about that. But I wanted to reiterate that, when you go parabolic like this in a short period of time, it's natural to have, some steam let off, especially because classic resistance level of kind of testing all-time highs and things like that. So, we got that pullback, especially because, it's around the holiday week. So we had probably some of the less of those big buyers in the space. So that was kind of a good kind of a perfect storm to have a pullback. And, we've had a rebound since then. Well, it looks like it's over. But so I think people have to be prepared for those, pullbacks. But if I were to guess, I would say I expect them to be a little bit shallower. And I also agree with Andy's point about some, investors kind of reaching towards proxies for Bitcoin. So to some extent, even I've done that, even though I have direct Bitcoin holdings. And the reason for that, and I made a point about MicroStrategy doing this, or people doing this with MicroStrategy months ago. I think it was on Peter McCormick's podcast or some other. I basically point out that MicroStrategy for some fund managers can now serve as a small Bitcoin proxy because they hold a lot of Bitcoin. And say you're a manager of a fund, right? So you invest in stocks. You can't, if you happen to be bullish on Bitcoin, you can't buy Bitcoin. It's outside of your mandate, but you can still buy MicroStrategy, right? So if you happen to have a portfolio manager that's limited to equities but is bullish on Bitcoin, he or she can express that view in the fund by saying, I like MicroStrategy, I like the discounted cash flow analysis, I like their investments. So basically you can justify it by just saying you like the company, and so I think that's a use case for it. And for example, in my research service, I have different model portfolios that are held at certain brokerages. And some of them you can't get direct Bitcoin access, so you have to use proxies if you want to express that within the model portfolio. And so, for example, I put funds into MicroStrategy back in August, and I'm a little bit concerned about it now because it went utterly parabolic this week. But back then it made a lot of sense in my view, and I still think it's generally going to keep up roughly with Bitcoin. But of course, it has these days like here where I think after his CNBC performance and other things like that, you kind of got this extra layer of money kind of flood into that. So I wouldn't be surprised to see somewhat of some steam being let out there, even if Bitcoin continues doing pretty well for a little bit.
Yeah. On CNBC last week, he was asked several times, like, so are you a software company or are you a Bitcoin fund? And, he's like, well, we're still a software company. We just happen to have Bitcoin as our reserve asset. Today, up 20, last time I checked, up 26% on the day. So yeah, that makes clear right there, clear evidence that it's being treated by some as a Bitcoin fund or a proxy for Bitcoin. That's fascinating. Bitcoin also in October, like around the start of October, started decoupling from gold. And this year, the run, like the charts had been just almost, neck and neck with each other in terms of a correlation, very high correlation. That has since broken completely down over the past 2 months. Bitcoin has sold off a bit, gold has sold off a bit. Bitcoin obviously has gone on a tear. Is this something that we'll continue to see? Is gold being sold into Bitcoin? Do we actually see Bitcoin actively taking market share away from gold, like directly? And if this might be the beginning of that trend, do you think it'll continue? Lyn, I'll start with you on this one.
So I would say I think perhaps to a small amount. I'd be careful about extrapolating that. So one thing I've covered is that gold tends to follow real interest rates extraordinarily closely, and it's the single biggest variable that correlates with gold over the long term. And the reason for that has to do with the opportunity cost. So gold is it's a scarce asset that it doesn't pay a yield, and there's a storage fee for it, so you can say it has a slightly negative yield. But because it's scarce, because it's gold, it has some degree of inflation indexation to it. But now, so when you can get a positive real yield on a 10-year treasury, right? So if inflation is 2% and you can get paid 4% for holding that treasury, you're getting a positive real yield. And so there's an opportunity cost for holding gold. On the other hand, if inflation is still 2%, but the treasury yield's 0.5%, you're getting a negative 1.5% real yield on your treasury, as suddenly that zero yielding scarce metal gold looks more attractive as a store of value. And so what you see over the very long term, in something going back 50 years, is that gold tends to go up with broad money supply over time, but the fluctuations around that trend largely have to do with real interest rates. So when you have real interest rates rising, gold is inverse to that, so it starts to get sold off and go down. And when you have real interest rates declining, gold tends to go up. And so that's ever since August. So we hit a bottom in real rates, and we started to trend a little bit higher because we're having 10-year Treasury yields go up a little bit over that time. So gold has been pressured from that trend. Now, November 9th was kind of an interesting date because that's when real yields they peaked a little bit and they started kind of going sideways or down, but gold actually accelerated its sell-off. Now, that's not totally unusual. So, gold follows real interest rates over any kind of multi-month period generally, but it can still have weeks of time where it deviates or overshoots that trend. So it's kind of entering oversold territory now. I think it's premature to say, that in a big way that Bitcoin's stealing its thunder. But I do think that Bitcoin's kind of, very sharp move over that period definitely could have contributed to that kind of multi-week window, that window since November 9th, where the price made a little bit less sense compared to real yields. I think within that scope, it's possible, yeah.
Yeah, that makes sense. Andy, I'm going to toss it over to you. Before I do, I just want to ask everyone who's watching now on YouTube, we have several hundred people watching. Please like the video and subscribe to the channel. We do this every Tuesday and Friday on a regular basis. Every once in a while, we have a special episode like this. We also have a bunch of other content on the channel, Bitcoin related, educational stuff, fun stuff. So subscribe to the channel now and like this video. Help it spread through YouTube, spread some Bitcoin education after this broadcast is over. Andy, your take on Bitcoin decoupling from gold recently, and do you see Bitcoin, meaningfully taking market share away from gold, directly taking market share away from gold, or do you see them both rising, over the next year together?
Yes. So Lyn is spot on about the proximate catalyst, I think, the real interest rates. It is currently the reflation, the quote unquote reflation trade that's going on in financial markets overall. I'm talking about stocks, bonds, right? There is hope that we'll have plenty of vaccines for COVID soon, and that will be good for stocks. There is a perception, I guess, that much of the uncertainty of the election is behind us, although there's still some ahead, but there's less than there was. And so this is sort of good for stocks, bad for bonds. Bad for bonds means rates up, which means real rates going down. Real rates going up. So I think that's what's going on in the short term. Am I a bull on gold still? Yeah, I am in the longer run. I believe that, as you say, Bitcoin will take share from gold. And, warning, I may have a visitor here. Bitcoin, hello, Betty. Bitcoin may take share from gold, but I actually expect gold to accrue more dollars of value over the next, few years. Let's say in this halving cycle or this epoch, right? Could Bitcoin go, to 2 trillion or to 5 trillion? Yes. But could gold go to 15 or 20 trillion? Also, yes. So total market cap accumulated or accrued by gold could easily exceed what Bitcoin does in the next few years. But as a percentage, that's obviously much bigger in favor of Bitcoin than gold.
Yeah.
This is Betty, by the way. I'm going to see if I can convince her to give me a few more minutes here. Sorry.
Sorry. Bitcoin is. Yeah. Sorry, got distracted there for a second. Bitcoin is certainly on a tear away from gold. I expect personally to see it, sort of eat away at gold's market cap as the store of value narrative continues to take hold. We'll see what happens. Lyn, we're touched the all-time high today. We are, according to some measures anyway. The New York Times called it an all-time high. CoinDesk called all-time high at 19,783, which is the Wikipedia cited all-time high number. I think that comes from a CoinDesk average that was published back in 2017, 2018, or whatever. We now have this mainstream media all-time high news hitting. Bitcoiners are mostly waiting for 20K. It's kind of the number that's been sort of seared into our brains over the bear market that we've been aiming for. So I think we'll see a lot more celebration on Bitcoin Twitter among Bitcoiners, specifically when 20K is reached. But we're seeing it out there in the mainstream media. What do you think about the news of the all-time high? Where do you expect us to go from here? Do you think we'll break through pretty quickly, or do you think we'll stay down in this range for a while? I do know in 2017, we touched the all-time high of about $1,200 and then was ranged for about 4 months before it really broke through.
Yeah, I don't have a strong opinion about timing. Like I said, I warned about a correction. I actually had some questions about that. People are like, when do you think the correction's over? And I was basically saying that, saying when the correction's over is a lot harder than having called the correction in the first place. All right, because you had all of those kind of overbought near-term indicators and just, a parabolic sentiment in the sense. I was kind of like, okay, I actually would welcome a correction here and just kind of, let out some of the steam. But, I think that the hard part is timing when that comes back. I would just say, basically once you firmly break out over 20,000, I think that's a really interesting time. And I honestly wouldn't be surprised if that happens tomorrow or if that happens like 2 months from now. I wouldn't be shocked either way.
Andy, how are you feeling about this all-time high territory?
Yeah, it feels good, Brady. The question is, did we already hit all-time high, or is it ahead of us? I've been staring at the 2016 chart, right, when we broke through in that cycle. That was before I was around in the sector, and we went up and down a couple times. We went through it, retraced. So I had no idea, what it's going to look like. I could see it going either way. I could see us, bouncing around and struggling to retake the high and hold it, or I could see blowing through it. Of course, the argument for sort of blowing through it and staying above it would be that sort of steady institutional and corporate bid. But I'm not gonna take a strong view on it.
Yeah, it's just fun speculation. It's a pastime amongst the Bitcoiners when we get up here, of course, to this level. Okay, some other news that I want to get into is Biden has appointed or declared that he will appoint Janet Yellen, nominate Janet Yellen as Treasury or the head of the Fed chair. During his administration, obviously Janet Yellen has been Fed chair before, and we have quite a few, we understand her sort of approach to running that institution, and she's even commented a bit on Bitcoin in the past. What does this particular appointment mean for Bitcoin and for a future monetary policy for the dollar as well? Lyn, you want to take this one?
So I don't think the news is that surprising. It kind of came down to, there's Brainerd was in the running and Yellen was in the running. So it's not that surprising. I think one interesting signal that it sends is the close cooperation between the Treasury and the Fed. And so, historically, those institutions are supposed to be as separate as possible because that's how you prevent, Banana Republic, printing, because, technically the Treasury, even though they issue the currency, they still have to borrow if they want to spend. Whereas the Federal Reserve, they can, lend money, but they can't just, for example, spend and give it to people, right? So you have the kind of separation of powers between the Treasury and the Fed, and you have to go back to the 1940s during World War II to find a period where they worked together as closely as they have this year, and that was because that was the only other time in history where U.S. federal debt as a percentage of GDP reached as high as it is now. And of course, that was for war funding. So what you basically had back then was wartime MMT, where the government was running, absolutely massive deficits that are even a little bit bigger than today. But this is the only period since then where we've gotten even close to those World War II deficits. But of course, when you're running that big deficits and you're racking up debt over 100% of GDP, there's not really enough buyers for them. So what the Treasury did was, what the Fed did was the Fed worked with the Treasury. They bought a lot of the Treasury bonds, but then they also capped the yield curve at 2.5%. So even though there are these spikes of inflation that at time reached double digits, the Fed just said, we're going to hold the entire Treasury yield curve at 2.5% or less, and we're going to print money and buy treasuries if we need to in order to maintain that peg. And of course, what you have with that scenario is the release valve is the currency, right? Because if the market can't express itself through yields, it can express itself through the currency. So the currency can weaken compared to other currencies. And so by having a former Fed chair, be ahead of the Treasury if she gets confirmed, which I would expect she will. I think that's a pretty powerful signal to the degree that the institutions will be working together in the 2020s, which is kind of unusual in a historical sense.
Andy, what was your reaction when former Fed Chair Janet Yellen is claimed, or Biden said he is going to nominate her for Treasury Secretary?
Yeah, I mean, my first reaction was Bitcoin sign guy was already legend, but we're just going to be more of that photo, which I love. The second thing is the point Lyn just made, which is the crossover, the revolving door, not only among government departments, but also among government and industry. And I guess I've talked about this before, but historically, and this is work done by economist Steve Hanke, who I think is not yet a Bitcoin bull, but he'll figure it out eventually, indicates that when you really get inflation is not when you have long or multiple periods of just quantitative easing and buying assets, but it's really when government, the Treasury Department in whatever country you're talking about, starts monetizing, when the Fed starts monetizing the deficits that the Treasury is borrowing to fund. And that's where we are, right? So the Fed has made it very clear that they're going to pursue inflation by any means necessary. Their target is symmetric. So if they have undershot for the last few years by their measure, then they plan to overshoot for a while. Will they succeed? I don't know, but certainly, yeah, the relationship between Fed and Treasury looks as cozy as it's been, as Lyn pointed out, in a very long time, in almost a century here. And it's going to be deficit. It's going to be, in my opinion, de facto monetization of government deficits. They will try to make it look like something else. But when we just went through a period, back in March when, there was literally outright funding of one department by the other, plus leverage to buy assets and save financial markets from the liquidation that was happening. That all the barriers, at least, whether they were real or psychological in the past, the barriers to government doing whatever it takes to solve, quote unquote, solve this debt problem. There's no limits, there's no rules. It's all coming together.
So from Stacy Herbert in the chat, co-host of the Orange Pill podcast, along with Max Kaiser, she's asking about whether or not it's too late for governments to get hostile to Bitcoin, to take that route as an approach to squash Bitcoin. Would the Biden administration's opinion on Bitcoin even matter with these massive institutions buying into Bitcoin, with it every day on a weekly, monthly basis becoming a more entrenched part of our financial system? Lyn, what do you think of the chances of a hostile reaction, or hostile, I guess, sort of attempt to ban or to, basically hinder Bitcoin in any way from the U.S. government or other governments around the world?
Yeah, so there's certainly a spectrum of things they can try to do, right? So there's, of course, on one end of the spectrum you have an outright ban, which is what the United States did to gold, back during the 30s. But on the other hand, you have other things that you have know your customer regulations. You have things that make it harder or impossible to self custody at some of the major exchanges, things like that. There are kind of things they can do around the margins to kind of bring it into their regulation fold. And so I think that's something to keep an eye for. That goes back to the whole kind of encryption debate that goes back decades that the government's largely lost out on. And so this is a topic I examined in my recent article on Bitcoin, about the question of, can it be banned? And so, of course, in the absolute sense, you can't ban Bitcoin because it's decentralized and encrypted. But you can, for example, ban it legally. in such a way that you prevent you put it in the black market in that particular country. You can make it so institutional money can't go in, and many retail investors that are not hardcore wouldn't go in because it'd be illegal to do so. Now, I think in the really long run, like we saw, for example, some countries like India not have a ton of success with that approach, and because Bitcoin kind of goes around that over time. I do think that could of course damage a bull run. Like if this bull run's going to in large part be based on institutional money coming in, then of course a ban in the United States, if you get that extreme outcome, would impair that particular kind of moment in time for the price. I think. But one kind of thing I point out is that I see some people saying that if Bitcoin gets big enough, the governments will ban it. Whereas I view it some ways the opposite. The larger it gets, the harder it is to even try those bans in some of these major markets, like United States or Europe or Japan, because once the donor class has billions of dollars invested in Bitcoin, that's it becomes even harder to ban at that point, right? Because now there's multiple publicly traded companies on major exchanges that have Bitcoin. There's multiple billionaires that have Bitcoins. There are hedge funds that have Bitcoins. So at that point, you're angering both retail, savers in Bitcoin, as well as big money donor class. And so I think as it gets bigger and bigger, their window for even trying to all out ban it is low. So I think the battles can be really around kind of the regulation approach. But there are people that specialize in the legal aspect that can go into way more detail than I can, about its prospects for all those different kind of regulation categories.
Yeah, we did have a legal deep dive with a couple of Bitcoin lawyers a couple episodes ago. So if you're looking for an overview of the regulatory environment in which Bitcoin is operating right now, that is a great episode. Andy, somebody in the chat just said, Jeffrey Lane just said that is Bitcoin too big to ban? Are we at that point now? Are we getting close? It's, a ban would, in the future, if this trend continues, could be a massive disruption to the economy.
Yeah, I agree. I see the risk of prohibition as extremely low. A few weeks ago, I tweeted that we finally reached a point where the regulatory risk embedded in investing in the internet giants, right? Facebook, Amazon, Google, etc., exceeds the regulatory risk of investing in Bitcoin, right? And you can look at the the set of circumstances, whether it's the control of the currency, making it clear that banks can hold Bitcoin, or whether it's PayPal adopting it and basically offering it to customers, or whether it's the granting of banking licenses in Wyoming, et cetera, et cetera. And so, yeah, I see the odds of prohibition as extremely low. We know what prohibition looks like in the US. It's ugly. It leads to organized crime. It fails anyway, right? It always gets repealed. So I am not very worried about prohibition. And I would add that what Lyn said is, yeah, it's not, well, to the question of is it already too big to ban? It's too small. It's both too big to ban and too small to matter. Now, if we want to have a discussion about like when will governments care, you could pick a number. I think maybe it's six-figure, Bitcoin price. Maybe it's $100,000 Bitcoin when it's actually big enough to even matter. And of course, I would argue that we're already past the point of adoption and entrenchment and involvement with the legacy financial system for Bitcoin success, and we'll be that much farther, at prices up there at that level. So yeah, I'm not worried about it. Extremely low risk.
I think it's a great point about comparing it to some of those tech companies, right? Because that's an increasing risk to watch out for some of those large mega cap companies, whether or not it relates to their monopolies over their their app stores, or Amazon, for example. People have often theorized that maybe the cloud part will be split from the retail part. Or Google has like a near monopoly status on search results, even though there are other search engines that people can go to. So it's not quite the same as monopoly, but just the fact that they've gotten such a lead over the others. And so I do think, or even just not even breaking them up, but there just could be massive like digital taxes on them, which is kind of things we've been seeing over the past couple of years. And so when I look at the risk of Bitcoin, I keep it in the context of comparing it to the risk of other asset classes. And so I say, in some ways I view it as riskier to have zero Bitcoin than an allocation of Bitcoin. But then of course, it becomes a matter of how large you want that allocation to be. And so I think each investor kind of has to weigh that for themselves. But I view it as it's in a different risk category, and therefore it's somewhat uncorrelated to investing in things like Apple and Google and Facebook and things like that. And I've been kind of toying with the idea of like a $1 trillion market cap as kind of the too big to ban number. It's kind of arbitrary, admittedly, but basically when it's like a quarter of a trillion or a third of a trillion, and then especially when you take into account the fact that only a percentage of that is in any one country, right? So there's call it 100 billion in the United States, for example, maybe more. That's still in the realm of you can get kind of a lot of regulatory pushback against that. But once you have hundreds and hundreds and hundreds of billions of dollars of American money invested in it, you're going against almost everyone if you try to do that prohibition approach, right? Where you have you're angering both people that have been in the Bitcoin community for a long time, and then you're also going after the big money that just recently invested in it.
Yeah, absolutely. We'll wrap up with one more question from the chat. This was posted a little bit ago by Eper1875. Does anyone here, do either guest, think that a new Bretton Woods will happen in the near future?
Can
Andy.
I take that first?
Yes.
I talked about this on Max Kaiser's show a few weeks ago. I think we are so far from a Bretton Woods that it's sort of comical to talk about. I mean, obviously, I guess it was I'm trying to remember, the IMF, outright came out and suggested that a few weeks ago. Bretton Woods was an agreement that came out of a total war in which there was a clear victor, and that victor was something like 40% of U.S. GDP. Lyn, I know, has made this point more than once to her clients and on other podcasts. So that is not the circumstances that we face today. Sort of the opposite. We have rising power that's challenging, the established power. That established power is, I don't know, maybe 20% of GDP, and everybody's running fat deficits for the most part, and it's a race to the bottom. So are all parties going to come to the table and agree on some Bretton Woods type system? Extremely, extremely unlikely, in my opinion. Could we have something more like a Plaza Accord, where it's a little softer, and you get some level of coordination about rates of depreciation among currencies among the major players? Maybe it's possible, but I think something that is as transformative, or as all-encompassing or pervasive as Bretton Woods is extremely low probability in any time in the foreseeable future.
I agree. And so I actually have an article coming out soon, but it's also something I've talked about in previous articles and previous podcasts, is that for the past 50 years or 45 years, you've been in the petrodollar system, which is basically the idea that, all around the world, oil is priced in dollars. So oil producers only sell their oil in dollars, and so any countries that wants oil then has to be able to get dollars. So a lot of them price their own trade in dollars, and so the dollar has a disproportionate large share of global trade and global reserve, which is what makes it the reserve currency. But we're already starting to see that kind of regime starting to fray. So in 2013, China said we're no longer going to reinvest our dollar surpluses into buying more treasuries, and instead they announced the Belt and Road Initiative. And indeed, in those past 7 years, China, they have less treasuries now than they did 7 years ago, because they've been investing those dollars elsewhere. So they've not been keeping in line with the petrodollar system, and we're starting to see, for example, Russia, as one of the largest oil and gas exporters, is getting more and more successful with pricing their oil in non-dollar currencies. So they've been selling it in euros. So if you look at trade between China and Russia, it has rapidly de-dollarized over the past 3 years. The trade between Russia and India has also de-dollarized. And in addition, even though Europe is in general allies to the United States, we've seen trade between Russia and Europe shift more and more towards the euro. And of course, we've seen a lot of U.S. sanctions against the Nord Stream pipeline, which kind of also gets to the heart of the petrodollar system. So what we're starting to see is an inherently more decentralized energy pricing payment network world out there. And so that's kind of my long-term base case. And I agree with Andy that a unified Bretton Woods is unlikely because the previous one came after total war at a time when there was one clear victor and some smaller other kind of counterparties, like for example the Soviet Union, and so United States was able to forge an unusually large deal like that. But going forward, the world's kind of increasingly decentralized, and so I think you're going to start to see more and more decentralization when it comes to payment networks. I do think that you could have, if you go back to the Mark Carney speech at Jackson Hole, so that was the governor of the Bank of England at the time, so one of US's closest allies, and he's at a US hosted event for central bankers with Jerome Powell and others all present, and he said the dollar's too dominant. We need to shift to a more neutral currency. And he was basically talking about like a government form of a Libra or a Bancor, like a basket of currencies that could be used as an international kind of medium of exchange to settle trade. And so that was also proposed back at Bretton Woods. It's always kind of been the alternative option. But that's the one of those examples that requires a ton of coordination. So I do think it's possible you could see small versions of that pop up. Like if you have a certain trading block, like for example, that new Asia Pacific trading block, I do think you could have kind of agreements like that to have kind of like a stable coin that's like a basket of multiple of their fiat currencies. That's kind of a more it's less ambitious than trying to get to the world agree if you just get a bunch of trading partners, like a dozen trading partners, to agree on something like that. So I do think whatever form it takes, I think you're going to see more and more decentralization when it comes to global trade over the next 5-10 years.
Fascinating. That was fantastic. Both of you brought some great takes today. That's why we wanted to have you on the show. Really appreciate your time. We'll let both of you go, and I will wrap up by talking a bit more about Swan. Thanks again, Lyn. Really appreciate it.
Yep. Thanks for having me.
All right. And Andy, thank you so much, man.
Thank you, Brady. Thank you, Lyn. Really appreciate what you're doing to educate people in the space. You too, Brady.
And I think you made some great points. I really like the point about comparing it to the regulation of the tech companies. I think I'm going to steal that. Reference to the course, but I think it's a great point.
Please do. All the best Bitcoiners steal everyone else's material and repackage it better.
It's true. Twitter is a distillation of all these ideas, and we get them down to 3 words. And that's what happens there. It's a proving ground of ideas. All right. Thanks again to both of you, and we will see you next time. Bye. Okay. Thank you all so much for joining us today. It was awesome to see so many people tuning in on YouTube. No doubt many of you are fans of Lyn. We heard a fantastic just summary of all kinds of great topics from her today. You should go ahead and subscribe to this channel. Lyn has been on this show a couple of times before. She is an advisor to Swan Bitcoin, the company that produces the show, and she'll be on again, no doubt, in the future. Andy Edstrom is also an advisor, author of Why Buy Bitcoin, and we pair up great guests for some really compelling discussions. I encourage you, if this is the first time on the channel, subscribe, like this video, and dig back into the archive. There's some great shows that I think you'll really enjoy. And we do this every Tuesday, and sometimes we do them on Mondays or other days when there is some bullish stuff to talk about. And we also have Swan Lounge, which is kind of a Bitcoiner hangout on Fridays. A lot of fun. Brekkie, you want to jump in with me?
I'm jumped. I'm here. What a show. Right. Oh.
Yeah, right?
Wow.
2 great minds. Lyn Alden is just as sharp as can be.
She was spectacular as always. Andy, I'm sorry, but that you have to try to keep up with her. But oof.
Yeah. So we talked about Niall Ferguson, who wrote a fantastic piece and published it in widely. It was syndicated across the internet, and he wrote a book called The Ascent of Money and is a very world-renowned historian. And he basically endorsed Bitcoin as the winner of this monetary revolution. And said basically that it's winning because it's scarce, because of scarcity, and because it's a sovereign money, a self-sovereign money, and thinks that it will win, obviously because of sound money principles, but also because it protects privacy. And both Lyn and Andy agreed that this is a big selling point of Bitcoin. A feature of Bitcoin is that it's a much more private money than the payments panopticon that is being built with central bank digital currencies.
It's you're 100% right, and something that I've found just to be really bullish and kind of amazing is a year ago I would share articles not like the ones that have come out, but I would share what I thought were bullish articles. Now I sent today's article and the Druckenmiller news, and I send these all to friends and family, and at the very least I don't get a bad response, and sometimes I get a really good response. So things are changing, and it's a wild time to be a Bitcoiner.
It's absolutely wild. We talked a lot today about just more bullish news, dominoes piling on top of each other. Guggenheim Investments has filed an amendment with the SEC declaring that they are able now to buy 10% of their net Treasury, their net the assets under reserve that in Bitcoin through Grayscale Bitcoin Trust. That's bullish news, just adding again to the dominoes of large institutions, public companies buying Bitcoin up in bulk.
Well, what was particularly amazing for me for that little bit of news is one of my close friends used to work at Guggenheim in that exact fund. And so when it came out, I sent him the news, and I never thought I would see him do it. He sent a text to our big group chat. He said, "You were right. I was wrong." That's all he said. It was a wonderful moment.
That's fantastic, man. It's hard to own up to that stuff, but hey, he's still early. It's still early days. Everyone watching, if there's anybody watching right now who's relatively new to Bitcoin, you think you may have missed out. No, it's still early. This is the process of a new money monetizing itself, and it's the upside is tremendous, far beyond where we are now to $250 $350 billion market cap, far beyond that. So get yourself some good Bitcoin books, listen to some good Bitcoin podcasts, develop those strong hands, as we call them, some deep conviction to hold for the long term. This is a 5, 10, 15, 20 year investment. Mm-hmm. And eventually, a lot of us think it'll become, the global money. And so it'll just be the money, and you'll have the best money that humans have ever known. All-time high, buddy. No, go ahead, man.
One thing to add. So just to that quick text message conversation between my friend who worked at Guggenheim, he said, I was right. And no, he said that I was right and he was wrong. And what I said back to him was actually, no, we're so early that we can both be right. It's not a matter of who's right and who's wrong. Bitcoin's amazing. So let's all get on board now because we still can.
100%, man. 100%. All-time high talk. They both sort of nodded their heads when I said that we're really waiting as Bitcoiners for that 20K number that's been seared into our brains this whole bear market. I think that's the big number that we need to get across for widespread celebration. But we did see New York Times and several other large mainstream publications, CNBC included, call all-time high today when it passed $19,783.
I don't really have much to say. I'm just here on the roller coaster. This is good stuff. Maybe we should just play some bullish videos like the Raul video we have, or I don't know.
We should do that. For sure. The MicroStrategy price run, it's up 26% today. Both agreed that it sounds like MicroStrategy is being used by some investors as sort of a proxy for buying Bitcoin because they might not be able to get access to it through, because of rules through their funds, for instance.
I don't want to talk about this, okay? I literally have some money in my stock brokerage account, which I don't even hold any other stonks right now, okay? And I was planning to buy MSTR, and I kept waiting for the dip. And just like Bitcoin, it didn't dip, and I feel like I missed my chance. So you're just kind of needling right now.
It's early. It's still early on MicroStrategy as well. This is why you don't, you got a dollar cost average into MicroStrategy, buddy.
It's true. It's true. Maybe we should start Swan MSTR.
Yeah.
Two things. We sell Bitcoin and MicroStrategy stock. That's it.
Last thing I wanted to recap on was the last topic that was addressed in there. I thought there were some fantastic contributions to the idea of whether or not there's going to be a new Bretton Woods happening in the future, this great reset idea. And I thought both had great points, and both thought that, you know, this is very, very unlikely to happen. And I tend to agree with them on that front. The idea that Lyn had, that trade will, you know, trend toward decentralization over the next, you know, decades, and we have possibly sort of regional agreements like Bretton Woods style agreements that would use stable coins, for instance, or agree upon basket of goods for regional trading. I thought that was really interesting.
It's definitely going to be interesting to see what happens. You know, a lot, as they mentioned, you know, the euro dollar system that we currently has is not. It's very unsteady and nobody likes it. You know, it's what we use. And if you look at how global trade is arranged, you know, everything's denominated in dollars. But I think when countries start to realize that there is another option, some of them might go to Bitcoin. You know, a lot of them are going to, you know, do their own central bank digital currencies, blah, blah, blah. But, you know, who knows? I mean, I think it was yesterday, Max Kaiser he tweeted out an article he was quoted in talking about how China seized, I think, over $1 billion worth of Bitcoin, or maybe it was a much higher number. I can't remember. But if any of these countries start deciding to hold on to that Bitcoin and not do, for example, what the US did with the Silk Road coins, you know, and auction them off, you know, I think all bets are off. You know, I think once we get nation state FOMO, it's going to be a mad dash. And pair that with, you know, the ability to use Bitcoin for, you know, settling international trade. I mean, it could be bonkers. So exciting times. I'm just
hodl FOMO, man. Hodl FOMO. People are, this idea of Bitcoin as a savings technology has been much more widely understood over the past year or so by larger and larger investors, and that can only lead to, I think, more supply being taken off the market, reducing the available supply for trading and whatever else is happening with Bitcoin. But it could lead to a shock, I think, and it'd be very fascinating, the result of that. Okay, let's talk a little bit about Swan and wrap this thing up. Thanks again, everyone, for joining us. Subscribe to this channel. We put out some great, Bitcoin content on the regular. We do this show every Tuesday. We do Swan Lounge, our Bitcoin Hangout, every Friday. Every once in a while, we'll do these, impromptu shows when there's just some big news that we need to talk about. And we have other great educational content on the channel as well. We're also streaming Bitcoin TV. Brekkie, tell us about Bitcoin TV, man.
Bitcoin TV. Bitcoin TV is my favorite thing on the internet today. It is a 24/7 live stream of Bitcoin content, highly curated. Some of the best talks on Bitcoin, some of the best explainer videos. We have some incredible documentaries in there as well. There's an incredible 4-part series from Reason TV about the whole history of the cypherpunk movement. And this is only the beginning. You know, we're about to launch some UX, some upgrades, and as well as adding tons of new content to the channel. So I'm so excited. I have it playing on like 3 or 4 different screens in my house, just so that when I go from room to room, I don't miss anything. It's a lot of fun, and frankly, the best part about it is the chat. There's a 24/7 chat going on the entire time. Bitcoiners just hanging out, talking about what's on, talking about the price. People are learning too. You know, somebody popped in the other day and was asking about how they saw something that was playing and they wanted to know about running a full node. And before I'd even gotten there to reply, someone else had, shared some fantastic resources. So it's a multi-layered resource, and I really hope you all kind of give it a shot, give it a try, share it with your friends. If you are living with pre-coiners, you can kind of put it on the television and not tell them and just start watching and see what happens. We're basically gearing it towards both pre-coiners and, long-time Bitcoiners. So hopefully there's something for everybody.
Yeah, it's classic stuff and new stuff as well. High quality, the best stuff on the web. And it's been a ton of fun just turning it on every once in a while, seeing what's up and playing, and diving into the chat. There's consistently, a consistent number of people watching at any given moment. We're just getting started with it. This is sort of the version the alpha version, the version 0.1, and we are going to be making more improvements to it, the way it's presented, the way it's organized, and just really excited to kind of get that out the door and see what people thought about it. And it's great reaction so far. So check out Bitcoin TV. It's a lot of fun. We are in New York, man. We're in New York. Big deal. I think we should close on your amazingly produced Bitcoin in New York, Swan Bitcoin in New York video.
Let's do it. Bitcoin in New York. Before we show it, go to swanbitcoin.com/New York, become a member, and get $10 of free Bitcoin. Ladies and germs, thanks for joining us today. We'll close on this.
In a world filled with uncertainty, Bitcoin gives us hope. And if we work together, we can bring about a bright orange future just a little bit sooner. With low-fee automatic buys, daily, weekly, or monthly, free automatic withdrawals, and world-class Bitcoin education, we've made it safe and easy to accumulate Bitcoin because you have your life to live. So go on and live it. All over the US, people are choosing Swan to achieve their Bitcoin goals. But in the financial capital of the world, the options for building your Bitcoin future are limited. Today, we are proud to announce that Swan Bitcoin is now open for business in all 50 states, including the great state of New York. Sign up at swanbitcoin.com/New York and get $10 of free Bitcoin when you become a member. Together, we are helping to build that bright orange future from sea to shining sea. We are advocates. We are educators. We are Bitcoiners.